It is time for an early RBI this morning. With all this talk about rates, that's a perfect segue into today's RBI, and it's on real estate. Because housing, well, this is shaping up a year that is going to be interesting, to say the least. So many question marks are out there, it's hard to know exactly what is going to happen. But Bank of America has some thoughts, and here are some takeaways from a new report from B of A. Look at this graphic. First of all, Bank of America analysts predict that affordability of home ownership is going to drop, maybe a lot. The median price of a home hitting 4.1 times the median income of an American family last year. That is not only an all-time record, that is even higher than the peak of the epic housing bubble in 2007. And now, rates are on the rise. And B of A analysts estimate that those rises, along with low inventory and already high prices, could lead to a 25% drop in affordability. Right? The other line is existing home sales. And you can see it takes about 6 months from when affordability begins to drop to where buyers start to bail out of the market. And with affordability on the way down, the point is this: it is easy to see a big drop in home sales this year. Except maybe not. We know all that sounds tough for real estate, but we aren't the angels of housing doom, promise. Because what is really random but interesting here is that Bank of America also notes that because rents are rising even more than home prices, at least in many places, it is still a better long-term deal to own rather than rent. So consider this all an epic sign of the times. Housing has never been less affordable to many new buyers. But because rents are even worse, housing looks less bad. You got that? The rent is too darn high, which makes high housing costs apparently okay? Random but confusing. It's going to be an interesting year for real estate.